Hello everyone. Today I will be presenting a comprehensive financial analysis of Amkor Technology, a key player in the global semiconductor industry. Company introduction. Business, a leading provider of outsourced semiconductor assembly and test services. Role, acts as a critical manufacturing partner for fabless chip companies and integrated device manufacturers. Why it matters. Enables the product of chips found in everything from smartphones to cars. Amkor doesn't design chips. Instead, it provides the essential back-end manufacturing, packaging, and testing that brings chip designs to life. It's a capital-intensive, low-margin, but vital link in the semiconductor supply chain. Balance sheet highlights. Strong growth. Total assets grew from $4.9 billion in 2019 to $6.9 billion in 2023. Improved capital structure. Shareholders' equity more than doubled, indicating less reliance on debt financing over time. Key change. A significant increase in property, plant, and equipment reflecting heavy capital investment and capacity. The balance sheet tells a story of growth and strategic investment. Amkor has been aggressively invested in its manufacturing footprint, funded by a healthier mix of retained earnings and manageable debt. Income statement highlights. Revenue growth, steady climb from $3.5 billion in 2019 to a peak of $6.5 billion in 2023. Profit volatility. Net income shows higher volatility, dropping sharply in 2023 despite high revenue. Key insight. Demonstrates sensitivity to market demand and pricing pressures in a cyclical industry. Where revenue growth has been impressive, 2023 revealed a core challenge. Profitability is a high sensitivity to industry cycles. A slowdown in the end market demand compressed margins significantly. Cash flow statement highlights. Cash generator. Consistently strong positive cash flow from operators. Reinvestor. This operational cash is primarily reinvested into the business via capital expenditures. Financing strategy. Uses cash to strategically pay down debt, improving the balance sheet. Amkor is a classic reinvestment story. It generates robust cash from its core operations and immediately plows it back into new factories and equipment to stay competitive while also prudently reducing debt. Liquidity analysis, position of strength. Current ratio, consistently strong from 1.8 to 2.46, above the 2.1 industry average. Quick ratio, similarly strong, meeting or beating the 1.5 benchmark. Conclusion, excellent short-term financial health and flexibility. Amkor has no liquidity concerns. Its current and quick ratios are solid and have improved over time, giving it a significant buffer to handle operational needs and unexpected challenges. Debt analysis getting stronger. Debt ratio improved from 55% to 49%, showing a deliberate deleveraging strategy. Times interest earned. Strong but volatile, comfortably covers interest through below the high industry average. Verdict, financial risk is declining, but the capital-intensive model requires more debt than a typical chip designer. Amkor is consciously building a stronger financial foundation. It carries more debt than the average semiconductor firm due to its factories, but it is actively and successfully reducing that burden. Profitability analysis, the structural reality. Net profit margin improved from 2.5% to a peak of 9.4%, but fell to 6% in 2023, far below the 25% industry average. Return on equity follows a similar pattern, peaking at 18.5%, but remaining the below 21.8 benchmark. Core takeaway. The OSAT is a lower margin business. Amkor's profitability is solid for its segments, but can't be compared directly to high margin chip designers. This is the most important lens for understanding Amkor. You cannot judge it by the stellar margins of NVIDIA or AMD. Its profitability is respectable for a manufacturer, but structurally lower, which is a key investment consideration. Efficiency analysis, the operational engine. Inventory turnover, exceptional and consistent at 8 to 9 times versus the 5.8 industry average. The total asset turnover, strong at 0.95, beating the average 0.7 average. Insight, world-class operation. Amcor excels at managing its working capital and squeezing revenue from its base assets. Where Amcor truly shines is its operational execution. It is superior inventory turnover, meaning it moves more products out the door incredibly fast, minimizing risk in a volatile market. It uses assets very efficiently. Market measures a valuable proposition. PE ratio typically trades at a discount to the industry, 16 versus 25. Divided policy, no dividend payout, all earning are reinvested. Market view, the market prices Amcor as a lower growth cyclical industry within the high growth tech sector. The market value Amcor is like the manufacturer. It is not like a high-flying tech stock. Its lower PE reflects its lower margin and higher capital needs. It's a value pick in the semiconductor space. Conclusion and investment recommendation. Strengths: operational excellence, strong liquidity, improving leverage. Weakness: structurally lower, cyclical profitability. Opportunity: essential industry role, potentially beneficiary of friendshoring and AI-driven packaging needs. Threat: heavy exposure to semiconductor industry cycles. Investment verdict: would I tell my family to invest? Conditional yes for the right investor. Yes if they seek a strategically important, well-run company in a critical industry trading at a reasonable valuation. It's a play on semiconductor volume growth. No if they seek a high-margin explosive growth or are risk adverse to industry downturns. In conclusion, Amcor is a financially healthy, efficient, run company in an essential industry. My recommendation is nuanced. It's a solid long-term investment for those who understand and accept its business model realities, but not for those chasing the highest tech growth stories. Thank you for your attention, and I am about done. And here is my reference page.